Good morning, and welcome to episode 193 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 25th, 2024. There's quite a bit going on around the world, so let's get right to it. First up, Israel and Hezbollah have increased their missile strikes on each other in Lebanon and Tel Aviv, escalating that conflict in the Middle East and worrying folks that it might go further to the levels of an all-out war. Meanwhile, Ukrainian President Zelensky told the UN that he thought that peace between Ukraine and Russia was closer than most people thought. In China, they've gone aggressive on stimulus to help their ailing economy. They've instituted interest rate cuts, stimulus into the economy, and help for the ailing property sector. Here in the U.S. Senate is about to vote on a continuing resolution to extend the life of the government so they won't run out of money for the next 3 months as they continue to try and hammer out a budget agreement. And of course, the big news over the past week was the fact that the Fed went ahead and aggressively cut interest rates here in the U.S. 50 basis points, or 0.5% last week, Wednesday. I've got more on that in a second, but first let's take a look at the numbers because that interest rate cut has gold and silver moving. Gold today is up 3.1% from a week ago. It's trading at $2,655.40 an ounce. It was $2,576.40 last week. Silver's up 3.9% to $31.87 an ounce. It was $30.67 last week. Platinum is up 0.5% to $992. That's $5 better than the $987 it stood at last week, Wednesday. And palladium, the only loser in the metals complex this week, it's down 5.9% to $1,065 an ounce. It was $1,132 an ounce last week. With silver slightly outperforming gold, it takes more ounces of silver to buy that ounce of gold, so your gold-silver ratio is down this week to 83.32. It was 84 even last week. And the dollar continues to slowly recede on the index against other major trading currencies. It's down to 100.48. It was 100.76 last week. I don't have a lot here to say about the 50 basis point rate cut last week, other than I don't think the markets were fooled by the commentary. Chairman Jerome Powell basically told everybody that they were going to cut interest rates 50 basis points, and it had nothing to do with the weakness of the economy. The economy was very, very strong. Well, if it is so strong, then why go aggressive with a 50 basis point rate cut? Our good friend Chuck Butler raised this yesterday in his Daily Pfennig. I wholeheartedly agree with him. For me, there's only 3 reasons that we could potentially see a 50-point drop in interest rates if the economy is as wonderful as everybody says. And number one, it's to support the current administration as they approach the upcoming election. But of course, the Fed's not political is what we're told, so that's not an option. The second reason is the economy is ailing. They're falling behind the power curve, and therefore they had to be aggressive to catch up to what they should have started earlier. And then the last option is what I think is probably the most plausible. It's the fact that they just flat out cannot service the debt at 5+% interest. So they had to go ahead and cut the interest rates to be able to service the debt better. It's a huge line item on the U.S. budget right now, is just servicing debt. We're going to get into that and a whole lot more tonight. Big event. We've got our On the Move webinar tonight with Adrian Day of Adrian Day Asset Management and myself. And we have a wonderful guest, Nomi Prinz of Global Prinsights. We're going to cover gold. We're going to cover the Fed. We're going to cover everything that has to do with your money and your portfolio tonight, 7 p.m. Eastern Time. Go ahead and tune in. If you have not signed up, you need to. This is going to be a jam-packed webinar. You don't want to miss it. As always, we want you to go ahead and follow us on YouTube, like us, send us your comments and questions. If we get them, we'll address them on air. We want you to go ahead and follow us on our social media. Get our twice weekly, always something interesting alerts, our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.